year, the Finance Minister of India made two important announcements regarding crypto assets and central bank digital currencies. The first announcement pertains to the taxation of crypto assets, including cryptocurrencies. And the second announcement relates to the issuance of a central bank digital currency or a digital rupee by India in the financial year 2022-23. Hello, everyone. I am Shehnaz Ahmed. I lead the Fintech research at Vidhi Center for Legal Policy. Welcome to this fourth and final video in our series of videos on crypto assets, that is Decrypting Crypto. I have with me my colleagues Isha and Aashima, who work as research fellows in our tax vertical. So today we will essentially be discussing the budget announcements regarding crypto taxation and central bank digital currencies, its impact on the market, and also try and understand how the regulatory framework for crypto assets will evolve and what CBDC issuance will mean for India. So without further ado, let's first perhaps focus a little bit on the crypto asset taxation bit. I'll come to you, Isha, first. I think before we start about how the taxation framework works, let's first understand how the finance bill seeks to define cryptocurrencies.
Thank you, Shehnaz. So firstly, the bill does not define cryptocurrencies. Instead, it defines virtual digital assets. Virtual digital assets, as per the bill, is any information, code, number, or token generated through cryptographic means or otherwise. The definition also specifically includes NFTs, which the government plans to notify in the future. The definition also carefully excludes Indian and foreign currency, perhaps to carve out RBI's CBDC that we may see soon.
Sure. Thanks, Isha. Okay, so that was about the definition in terms of how virtual digital assets are defined in the bill. We have cryptocurrencies there, we have NFTs there, we have the government reserving a power to also notify further digital assets as a part of this definition. So now that we are clear on the definition, perhaps now let's understand how the taxation framework works. What's the rate of tax? What will be the mechanism to compute the tax? Aashima, maybe you can sort of help us to understand these issues.
Sure. So the finance bill proposes certain key amendments in addition to introducing the definition of virtual digital assets. I'll very briefly walk you through those. As a starting point, a new charging provision has been introduced wherein all transactions that involve the transfer of virtual digital assets, including crypto, will be taxed at a standard rate of 30%. Now, interestingly, this 30% plus any applicable cess or surcharge, when this tax is being applied, the taxpayers will not be able to claim any business expenses. They will not be able to set off any losses. And the only way they can reduce their taxable income is by taking the cost of acquiring the asset. The second proposal that has been brought about is that any person who is now acquiring virtual digital assets will have a withholding obligation. This person can be a resident of India or a non-resident of India. And there's certain issues, in my opinion, with this when it comes to the withholding rate of 1% on the consideration. One is that it will have an impact on volume trading. So say there are day traders who carry out many transactions during the course of the day, and now they'll have to take out specific time and effort to make sure that they're deducting tax at source for every transaction. And second, the withholding obligation will be applicable in case of transactions where there's fiat to crypto or crypto to crypto transactions, or even where crypto is being exchanged for, say, a commodity in kind. So conversion would have to be made in INR and then the TDS would have to be deposited. The third and the important thing over here is that any person going forward that receives virtual digital assets, including crypto, for a consideration that's not adequate or as a gift will be liable to pay tax. There's certain exceptions to it. For example, say if I was to receive crypto coins from my relatives, then I'll be excluded from the tax ambit, but this provision has also been added. Before I conclude, I would like to clarify that while yes, a new framework is being proposed from 1st April 2022 onwards, the tax authorities have said expressly clarified in a post-budget interview that this is just clarificatory in nature. This does not mean that any transaction that has taken place prior to 1st April will be tax-free. So even those transactions will be taxed based on how the income has been characterized or how these assets have been characterized under the income tax, the current framework, either as capital assets or stock in trade, and whether the assessing officer agrees with it.
Thanks, Aashima. I think the industry has sort of welcomed this move on the clarity for crypto asset taxation. I mean, it's a very welcome move. But do we see any sort of open issues there? Are there also areas which perhaps will need further clarity by policymakers?
I think I'll address the confusion with respect to the definition of virtual digital assets first. So the definition has been kept very broad, but there's been some discussion online as to its coverage. For instance, there has been some confusion regarding three things in particular. Firstly, since El Salvador has adopted Bitcoin as legal tender, does that make Bitcoin foreign currency and therefore put it outside the scope of virtual digital assets and therefore also the tax net? That's the first issue. The second issue is that the government does not adopt a descriptive definition for NFTs within the definition of virtual digital assets. Instead, only those NFTs that will be notified will be covered by the definition of virtual digital assets. So it's not clear whether the government will list each and every NFT or lay down broad characteristics that will cover certain types of NFTs. The third problem with the definition of virtual digital assets is it includes information, code, number, or token generated through means other than cryptographic means as well, which means that debit card and credit card points could be brought under the tax net, which was earlier not taxable.
Sure. Thanks, Isha. I think we've discussed the broader framework, taxation framework here. Perhaps we can move on to a little bit of more specifics. Now, I think one question perhaps that seems to also be coming up is the tax liability of minors. Now, will minors essentially be liable when they are, when they're rewarded for validating a block? Aashima, maybe if you want to sort of take this up.
Sure. I think this is a very pertinent and important question. Now, I'll just quote what the proposed provision reads. It says any income from the transfer of any virtual digital asset will fall within the tax bracket. Now, the word transfer in the context of Income Tax Act has always been used for secondary transactions, which we generally use for disposals. Now, we understand when it comes to mining or say staking, there will be taxpayers who receive tokens as a way of initial acquisition and not as a secondary transaction. So it has to be clarified going forward whether the broader charging provision will include minors or not. In my opinion, it seems like that was the intent, but I think a clarity is required.
Okay. Got it. So now I think the next point here perhaps is the fact that obviously the finance bill talks about amendments or sort of legislative provisions from an income tax perspective. Are there any updates on the GST front, like if there is any sort of a tax liability that we see under there?
Unfortunately, the budget did not provide any clarity on the GST implications of dealing in cryptocurrencies. So there is still uncertainty around the classification of cryptocurrencies, whether it will qualify as goods or services, or whether they intend on qualifying it as money under the Act. So on the GST front, there is still some ambiguity.
Sure. I think one more question perhaps is essentially just to kind of understand also the impact of these sort of amendments or provisions on the industry in general or in the sector in general, and perhaps what seems to have been the policy or the legislative intention in sort of coming up with this particular taxation framework of sort of imposing a 30% tax on that. So maybe, somebody, one of you can sort of take that up.
Sure. So I'll take this up. Like we discussed, yes, it is a welcome move. Up until now, there was no clarity on the taxation framework. Going forward, this will definitely help and aid in the understanding of the industry when it comes to tax implications. Having said that, the government is trying to place cryptocurrency or say virtual digital assets at par with speculative activities, for example, horse racing. And the tax rate is really high. It's 30% plus any applicable cess or surcharge. So the intent seems to be to curb the industry, in my opinion. Maybe the apprehensions could be because the industry is very volatile, or maybe due to the environmental impact that activities like mining have. I think as a starting point, this is great. The industry will, any new investor who had not yet invested just because there was no clarity about the taxation framework will now be keen to invest. But old investors or people who think that the profit margin will reduce may not be very happy with this decision, and this may disrupt the growth of the industry in the long run. I'll just give a very brief example, like a business, a trader of cryptocurrency, for example, will not be able to reduce his business expenses. So he'll not be paying taxes on the actual profit, but on the notional profit that he makes. Or an investor will not be able to claim a lower rate of tax for holding the assets for a longer period of time, which would have happened had cryptocurrency or virtual digital assets, as it has been defined, were classified as normal capital assets and not as a separate class.
Sure. Thanks, Aashima. I think I'd also sort of perhaps bring in the point that you, I think, highlighted about how the intention perhaps might have been to sort of not encourage crypto investments.
Right.
And somehow, I mean, the government had, like before the taxation framework, there were talks about how the government was planning to introduce a bill for regulating the crypto asset market. But surprisingly, the bill never kind of found a mention in this year's budget. But I think the government decided that before a bill, it might be useful to sort of first deal with the taxation aspect of it and try and perhaps regulate, or I don't know if regulate is a correct word, but try and perhaps indicate its disinclination towards investment through a higher tax rate. So that's great, but I think the question that sort of also has come up, and a sort of confusion perhaps that seems to have been there, is does the imposition of tax confer legitimacy on cryptocurrency investments? I think this is something that the sector has been battling with for a long time in terms of what is the regulatory status of crypto assets. Now that we have a tax framework for crypto assets, does this mean that investments in crypto assets are legitimate and it will protect investors? So I think that's something, if one of you can sort of address this.
Sure, I think this is very important. I've come across sources and media reports where, it has been highlighted that now that there's a tax framework, it also is being equated with the government's intention to legitimize cryptocurrency and virtual digital assets in the future. But I would like to emphasize that government officials have expressly clarified that going forward, just because people are paying tax on a transaction does not by itself make it legal or regulated. So they're two very separate things. It should not be seen as if that just because you're paying tax, now it's going to be regulated. What do you think, Shehnaz? How do you foresee this impacting the regulatory side of things?
Sure. I think I completely agree with your sort of assessment, how perhaps, one should not sort of say that by this taxation framework, you are sort of legitimizing or, this entire industry. And also it doesn't take away the power of the government to tomorrow sort of curtail, ban or prohibit certain investments in crypto assets. But I think from a regulatory perspective, I think given the rapid expansion of this market, the exponential rise in its market capitalization, the investor interest that we are seeing, I think it's a high time that India should start actually thinking about a proper regulatory framework for crypto assets. While taxation is one bit of it, but I think, when it comes to the risks that investors pose, when they are sometimes, most investors are not even aware about what they are investing in. There is, there are so many other harms or risks that investors are exposed to. So I think from that perspective, it is, I think, important that we we need to think about a regulatory framework. And just to kind of also, kind of brief our listeners about it, I mean, the Vidhi Center for Legal Policy has also released a working paper on arguing for a standalone law on crypto assets. So you can visit our website and sort of go through the report on blueprint of a law for regulating crypto assets. And of course, we are also coming up with our research on taxation of virtual currencies and cryptocurrencies.